Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. Welcome to Next Level Charting. It's Thursday, June 4th, and today we're going to backtest some breadth indicators. The percent above the 50-day SMA, the percent above the 150-day SMA, the percent above the 200-day SMA, and then we're going to put them all together as a composite indicator and even expand that more with a 16-plus year backtest. So we're going to start off with the percentage of stocks above the 50-day simple moving average. And this is a different data set than I normally use, but StockCharts does have some really good historical data going back to like 2001, I believe, for the percentage above the 200-day SMA, 150-day SMA, and 200-day SMA. And they have it for the S&P 500, the S&P 100, and the NASDAQ 100. Also for the NASDAQ, I believe, in the NYSE, but I'm really interested in these common stock breadth indicators, especially for the S&P 500. Now, the problem here with using these three is there is some overlap. So, of course, every stock in the S&P 100 is also in the S&P 500. So there's definitely overlap there. And 80-some stocks in the NASDAQ 100 are also in the S&P 500, so there's some overlap there. So when it comes to broad market analysis, I don't like to use just one indicator. I like to use a group of indicators, and I like it to be an odd number of indicators, 3 or 9 or 5. That way you never have a tie. You always have one more bullish or one more bearish. And so what I'm going to do is I'm going to build this up, and at the end we're going to end up with 9 moving average indicators and see how that tests over a 16-year period. So the first 3 are going to be percentage above the SMA, but we're not going to use OEX and NDX. I'm just going to go through these now. Because of the overlap, I'm not going to use them. But in general, percentage above the 50-day EMA, I'm looking for some critical mass. All right, I want to see a lot of stocks above the 50-day moving average. Because it's a medium-term moving average, it's easier to get above it than, say, the 200-day moving average. So that's why I want a higher threshold at 80%. And that shows a lot of upside participation medium term. On the downside, you get below 20%. That shows a lot of downside participation, a lot of selling pressure or stocks that are participating in the decline, and that is bearish. And that happened at the end of February. So basically 1 year between these signals. And then you can see here in May, we've got 3 of 3, and the NASDAQ 100 was first in late April to get above 80%. And then OEX and SPX followed suit in the middle latter part of May. So all 3 are on bullish signals right now. But as I said, we're going to go a little bit further and look at the 150-day and the 200-day next. So here's the percentage of stocks above the 150-day simple moving average. Now, I've changed the bullish and bearish thresholds because it is a little harder to get above the 150-day. So I'm going to lower the threshold to 70% for the bullish threshold and 30% for the bearish threshold. And when 2 of the 3 get above, that's a bullish signal. And when 2 of the 3 get below 20, that is a bearish signal. And so you can see we got a late bearish signal in December. In fact, what's interesting is in October, the NASDAQ 100 was the first to signal. And then the S&P 500 and 100 followed suit in the middle of December 2018. We got back to bullish in the latter part of March, maybe early April there, and stayed bullish until the latter part of February, when 2 of the 3 moved below 30%, and the NASDAQ followed suit in March. Now, currently, all 3 of these indicators are bearish. They are below that 70% threshold. The NASDAQ 100 is the closest. So if we go out, and 150 days is roughly 7 months. That's getting long term, if you will. And so longer term, you can see a lot of stocks are still struggling. More than 50% of the S&P 500 are below that 150-day SMA. So this here is the percentage of stocks above the 200-day SMA, and it's a little bit harder to get up over your 200-day SMA. So I've lowered the threshold to 60% for bullish and 40% for bearish. And you can see that here in October, so this indicator triggered when all three moved below 40%, and that was pretty timely, avoided this December decline. And then they all three got bullish there in the middle of February. And this is why I like to use an array of indicators and put them together as a composite. Stayed bullish until late February when two of the three triggered. And you can see now that the NASDAQ 100 has triggered bullish because over 70% of its stocks are above the 200-day, but OEX and SPX have yet to trigger bullish. So here's the first round of things going to be on the S&P 500 indicators, percent above 50-day EMA, percent above 150-day EMA, and percent above 200-day EMA. And just looking at the chart here, you can see that we had two of the three turning bearish there in late October, and then they turned bullish again in mid-February, two of the three moving above their bullish thresholds. And then all three moved below their bearish thresholds in February. And we have one of the three moving above its bullish threshold, the percent above the 50-day EMA. But you can see that still less than 50% of stocks are above the 150-day, and less than 50% are above the 200-day. So I'm going to test each of these individually and then as a group. So the reason for this back test is because I've got a breadth model at trendinvestorpro.com, and I back tested a version of this model over the weekend, and I'm using Norgate data for the back test. So it's not the same data or signals you might see on StockCharts. But what I did here was I took these breadth indicators, and the model goes from +9 to -9 there when all 9 signals are bearish, all 9 signals are bullish. And basically you want to get net bullish or bearish. And these are the signals that is generated since 2004. Got out of the 2007-8 bear market, but you can see it triggered early, and there was a new high there in October 2007. And then we came down. So it took about 6 months for that top to form. Whipsaws in 2010, you're not going to get out of those. A bit of a whipsaw there in 14. Avoided some of this choppy trading, but caught this advance and turned bearish at the end of February. And so because this model is not bearish and we're seeing all these movements in stocks, I wanted to test some other models, and that's why I've come up with this moving average based model that I'm going to show you now. So I'm now going to turn to Amy Broker and test some of these signals that I just showed you on those charts there. Now I'm using Amy Broker software to do this testing, and the data is from Norgate. So they also have this data set. It might not match up exactly with the data at StockCharts. That's the way it is with these big historical data sets, especially with breadth indicators. But I think it's a pretty robust data set. And so we're going to start with the percentage of stocks above the 50-day EMA for the test. The normal bullish and bearish thresholds stay for the buy and sell signals. Buy with a move above 80%, sell with a move below 20%. And we can see all of the trades, and it has a compound annual return of 6.7%. And this testing period goes from January 2003 until June 2020. And you can see a drawdown of 30%, so that's too big of a drawdown. 11 winners and 6 losers, not a bad winning percent. So let's see how it looks on the chart. There are a lot of signals, and there are going to be some whipsaws or shorter signals. But you can see it does catch some of the big trends, and you were out during the bear market of 2008, and you caught some big uptrends along the way. Now we're going to test the signals from the percentage above the 150-day moving average. Move above 70% bullish, move below 30% bearish. You can see right away that there are fewer signals on this longer-term indicator. And you can see that there's also one loss there, and that was in 2014, 2015. So the compound annual return, 8.8%, very respectable. Drawdown was only 15%. You had 6 winners and 1 loser. So let's see how those signals looked on the chart. I need to go ahead and right-click, and I will show the actual trades, and then we will move over to that indicator. So there you can see it turning green. The bar there, you're bullish, you're out in 2008, and then you rode most of this with a couple of whipsaws during the volatile periods, but for the most part, you caught all the trends, and that's why performance was good. So now let's look at the signals from the percentage above the 200-day moving average. And you can see in this instance, we have 3 losing trades. So it didn't have as good of a winning percentage. We had a compound annual return of 7.8%, maximum drawdown of 20%. There were 7 winners and 3 losers. Overall, not bad at all. And then if we look at the signals here, we can see there in 2004 got a little whipsaw. Got a little whipsaw before the financial crisis, but had a bearish signal before. And then a whipsaws in 2010 and during the volatility of 2011, but caught most of the trends, and that's why you have a positive return for this indicator. All right, so now let's look at the composite signal. So we're going to use all 3 indicators that I just showed you. When 2 of the 3 are on bullish signals, that'll be a buy for SPY. When 2 of the 3 are on bearish signals, that'll be a sell for SPY. And we're going to use the same testing period, 2003 to 2020. And when we use this strategy, you can see the compound annual return, 8.5%, very nice. The drawdown was 15%, and you had 7 winners and 2 losers. And when we look at this chart here, you can see that you would catch the uptrends. You got a little whipsaw there. You miss the downtrend, which is good, and you catch most of the uptrends. And so we got a bearish signal there in late February, and we haven't gotten a bullish signal yet. And that is because, of course, the percentage above the 50-day SMA is bullish, but the other 2 longer-term indicators are still on bearish signals. Now, one more thing I'll note about this test is the results are pretty good because, if I'd started at 2007, they wouldn't be as good. I went to 2003 because that's when I think I have the most robust data. So we caught this advance to begin with and then had the bear market and then another big advance. So the returns do look pretty good, but it was a pretty good time for the market overall. So again, here's the chart showing that only 1 of the 3 indicators is currently on a bullish signal. The other 2 are not on bullish signals. But what's interesting is we have this breadth thrust in the percent of stocks above the 50-day SMA. And we also have it in the S&P Mid-Cap 400 and the S&P Small-Cap 600. And I'm going to test that signal when all 3 have this breadth thrust. And I'm going to show those results in Trend Investor Pro on Friday. So I will post these results to Trend Investor Pro in the next week or so. That concludes this edition of Next Level Charting. Thanks very much for tuning in and have a great day.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.